Hong Kong, with some investors in its bonds running for the exits and foreign banks increasingly skeptical about its prospects, HNA Group tried this week to reassure markets that it has access to the money it needs. At the same time, HNA, a vast but troubled Chinese conglomerate, is continuing the drive that helped cause its difficulties in the first place, completing billions of dollars in foreign deals. The competing efforts by a company that has symbolized China's growing wealth and global ambitions are a problem for the country's leaders. They want to end wasteful overseas spending by debt-laden Chinese companies, which in the case of HNA and some others have drawn growing regulatory scrutiny in the United States and Europe. China has yet to let one of its big conglomerates fail, and HNA is unlikely to be an exception. But it is testing how effectively China can curb such behavior, and how the country may deal with some companies that have gone too far. HNA said late Wednesday that it had talked to 8 Chinese banks, including powerful and politically connected lenders like China Development Bank and China Construction Bank, about extending the conglomerate's credit lines next year. HNA said several of the banks plan to increase the amount of money it could borrow if needed. Bank officials believe HNA is the best quality client of banks, according to a statement posted on HNA's website. An HNA spokesman said the company had no further comment. HNA made the disclosure as its problems continued to mount. The company's publicly traded bonds have fallen in recent days as worries grew among global investors about the challenges it faces. The bond's declining value makes it more expensive for HNA to borrow, which analysts say the company must do to meet its obligations. It owes at least $21 billion to bondholders overseas and $16 billion in so-called syndicated loans from banks, according to data from the data provider Dealogic. The situation is a lot worse now, said Chung Yuang, a senior fixed income analyst at iFast Corporation, an online investment platform. HNA is only able to pay its old debts by taking new ones. Foreign banks have already grown wary of working with HNA. Goldman Sachs and Bank of America Merrill Lynch have stopped doing business with the company, while HSBC bankers have shared concerns among themselves about HNA's acquisition binge and its ownership structure, according to internal documents and people with direct knowledge of the firms. Despite the bank's hesitation and growing skepticism on the part of officials in China, Europe and the United States, HNA is moving ahead on completing deals it has struck this year. It announced $12 billion worth of deals in 2017, $3 billion of which are pending, according to Dealogic. In recent months, HNA units have agreed to pay $300 million for a refrigerator logistics business owned by Automotive Holdings Group and $1 billion for Hundredweight, a Singaporean logistics operator. After a buying spree that began 2 years ago, HNA now has operations in countries from Germany to Australia, and in cities like Hong Kong, London and New York. People around the world take money from a financial institution it partially owns, fly on its planes and sleep in its hotels.